But just to kind of have a bigger picture on what's going on the GBP USD on a higher time frame, I think I've touched on this a little bit in our last. So let me just get rid of this. So this is what you're gonna see. So this is a textbook bearish continuation trade. I mean, I've taken a short trade on a daily. I've taken a short trade on my day trading strategy. But looking at this on the bigger picture, you're gonna see a typical bearish market continuation trade where we had an impulse leg to the downside. The market gave you a little correction. The market has now created a new structure low. Now we're getting a reversal back into. So if you're familiar with a bearish structure or a bearish market, then you will know that this market is currently in a reversal zone. Now what I mean by reversal, but we're talking about anywhere between the 382 retracement and above this previous structure. This market will give you a reversal sometime, anytime from now basically. Now it doesn't mean that straight away the market is going to reverse. No, it means the market can crawl up some more, can go even deeper before we get the reversal. But this is definitely coming. This reversal is definitely coming. Mark my words, the reversal is coming. So that's why I said today's trade, it can be a winning trade and it can also be a losing trade. I think it's more on the side of a losing trade than a winning trade. But we just have to wait and see. But like I said, whatever happens, in this week, we're going to get this move down this week. And based on my strategy, I will be on that move down, guys. I will be taking a short trade and I will be making some profit on this short trade move. So that's why sometimes in trading you have to try and look at the bigger picture. That's why it's not about one trade. It's not about two trades. Don't ever look to kind of make a huge amount of profit on a single trade, or don't ever try to look to risk too much on a single trade, because like I said, based on today's pattern, it's not, I wouldn't classify that as my favorite pattern when it comes to this particular strategy that I'm trading. It's not my favorite one. But I've seen trades like that, but then again, those are the kind of trades where if the market does reverse, like if the market does reverse today, let's say at around 1 o'clock or on New York session, I will make a huge in terms of the profit potential is very huge compared to other patterns. So, and also the fact that this market, looking at this market, I know potentially we are going to get this move down either tomorrow or Wednesday or Thursday. This big move down is coming, and it's probably going to be as fast as this big move down. But this market needs to do what it needs to do here. The market, it can take as long as it wants. It can keep crawling up, but eventually this move is going to happen, and I'm going to be on this move. I'm going to be taking a short trade when this moves happen on a daily chart, on my daily trading time frame, of course. So let's head over to bring it back to the 5-minute chart. Okay, I'm gonna have to delete this because it's getting in the way. And let me bring up my shaded area, and this needs to go. But just bear in mind that we are in a reversal zone. We are in a reversal zone, and this time the RSI is useless in situations like this. It's useless even though it's showing overbought conditions, divergence, and whatever. If the market wants to keep going up, it's gonna go up because the reversal zone is quite, it's not a small reversal zone. But anyway, on the daily chart it has some strength to go upside. Okay, let's look at the daily chart then. Let's have a look at the daily chart. Yeah, but don't forget that on the daily chart you have the market coming into structure level. So it's not by strength of going upside. The market is coming into structure level, and if you remember correctly, what I said in the last probably the previous stream, when I talked about the fact that every time a market breaks a structure, it should never be a signal to just sell straight away, because the market would give you a breather. It will retrace to the nearest structure. So to this market, this is just a retracement for another move down. So I would be very careful if I'm going long on this market. I'll be very, very careful because of the fact that these two daily structures here. And you know, when the market comes to a structure level, it doesn't just break a structure level and goes. Especially a structure level as strong as this. I mean, look at this structure level. What do we have here? We have first test here. In fact, we have there's a little minor test here, all the way back here. So let's extend this. Yeah, so structure level, structure level. The first time the market came onto that structure level, it just bounced back up. Came back again, it bounced back up. Before it finally broke the structure level. So do I think the market is going to come and just blow this structure level on the first attempt? No, I don't think the market is going to do that. I think we're going to get a market coming back to that structure level and giving you a move down. And if it wants to break the structure level, then it's probably going to come back and try it again for the second time. And it might succeed on the second time. But all I'm saying is, I don't see the market breaking this structure level on the first try. So we could go a little bit higher onto around 136.07, which is about 22 pips from our current position. I think that would even be amazing. Like with my strategy, I mean, if we get there by 1 o'clock, 1:30, or even New York session, then I will be adding to my short position. So yeah, daily chart, the market is still kind of correcting, but I would be very careful, going long on this market, because I'm saying everything points to a bearish continuation. Everything points to a bearish continuation. So do not get kind of scared by any kind of little movements to the upside, because even if you look at the particular structure of this market, this is not a structure that goes up compared to the one we had on Friday. You see the one on Friday, just compare those two structures. This is a bit chubby, a bit sideways. It took this market a whole, so we had about 60 pips movement from about 7 o'clock. So 5 hours, about 60 pips movement. What did we have here? 90 pips movement. So you can see where the momentum is. I don't think this one has enough momentum. Like I say, it could go up some more, but I don't see it getting to those kind of levels that will break this structure on a daily chart, and we're not really too far away from there. So but anyway, let's try and do some analysis. And yeah, if you guys have any questions, just drop it in the comment section in the live chat, and I will be answering every single one of your questions. But let's have a look at some other currency pairs, and I'm gonna start with New Zealand dollar, because someone did ask me to have a look at that. So I'm gonna start with New Zealand dollar. Kiwi, let's go. Okay, this is really interesting. Structurally speaking, this is very interesting, because it's there's two ways you can look at this. If you look at this as a whole on a 4-hour chart, or even let me see if I can get a better picture on a daily chart. If I put this on a daily chart, what you're gonna see is, straight away at first glance, you're gonna see that this is a corrective pattern. It's a corrective pattern that tends to break to the upside. Corrective pattern because we had a huge impulse leg here. Oops. Corrective pattern because we had a huge impulse leg here. and this is a corrective pattern on a daily chart. So let's you know what, let's do a proper, let's start off with the weekly chart, because the weekly chart might give you a different type of reading on the weekly chart. Okay, no, weekly doesn't really tell me anything. Weekly tells me the market is bullish, it's still bullish. So let's go back to the 4 hour chart, the 4 hour chart, and analyze this a bit better. So New Zealand is in a corrective pattern that's likely gonna go up once the correction is over. So like I said, this is a whole corrective pattern, and these patterns tends to break to the upside. In terms of wave count, we have 1, 2, 3, 4. Now the question is this wave gonna come and make a low before it finally takes off? Generally the market does that. Generally speaking, the market does that. So if you're in a New Zealand dollar trade, if you're long on a New Zealand dollar, I don't think you need to be worried. As long as you just have enough kind of as long as you make sure that if the market comes back below this level, your account is still going to be safe, then I don't think you need to worry about that. This is probably the only dollar currency pair that's showing signs of bullishness compared to the GBP USD. The GBP USD is bearish. I wouldn't say it's bearish, but I think in the short term we are gonna get some more bearish movements. In terms of lower time frames, do we have any trading opportunity on a lower time frame? Not really. I mean, you can look at this as a potential reverse head and shoulders, and you can expect this market to at least go up and make another high. That's probably the only thing I would say. So short term, you can probably be looking at New Zealand. The short term is a long trade. Long term is a long trade. But just being on the cautious side that the market could come back and break this low before it continually goes up. It can do that. So let's have a look at the euros. I touched on the euro on the first or the second live stream that I've done when I said that we had a really important level here where if the euro breaks that level, the market will take a breather. So now we've broken that level, and you can see the market is gradually coming back into the level. That's what the market does. You can go and do a research on so many structures, on so many charts. Just keep a journal. Just do a research where you look at every single time the market breaks a structure. Just try to understand the behavior of the market after it breaks a structure. And I'm gonna promise you guys that 90%, 80% of the time a market breaks a structure, it retraces. It retraces 80% of the time. And there's one thing in trading called the fear of missing out, where usually when new traders, when they see the market breaking new heights and the market breaking a new structure, they panic. They'll be like, oh, the market is going up, I'm going to miss out, the market is going up. And that's when they buy or they sell, depending on which direction the market is going. And then as soon as you've done that, you see the market start to go against you. That's because people do not understand the concept, the language of the Forex market. They do not understand structure. This is how structure works. Every single time you see a market breaking a structure, your brain should tell you that that is just a sign of communication. That is just the market, talking to me. It should never be a sign for you to just go on your trading platform or your phone or whatever and just click a buy or sell order. You don't do that. But if you don't believe me, like I said, just go look at the charts, do your research, Study these charts. If you look at 100 different structures where the structural point where the market breaks a particular structure, just do the maths. Keep a statistics. Look at how many times the market has actually gone in that direction after breaking a structure, or how many times has the market actually traced back to find another structure level before it continues its movement. It's just a normal. That's a normal way of the market moving. And sometimes, like I said, sometimes when it breaks that structure, you know, the retracement sometimes can be a lot deeper. That it can confuse a lot of people that will think, oh, maybe that's just a fake out. The market doesn't do anything with it. The market has a rules that it stick to. Even the market has rules. That's why if you need to have a trading strategy, you need to have a rule for your trading strategy that you can follow, because the market follows its rules. The market is not random. No matter how people might try to tell you that the market is not random, it's not random. The market has rules. It sticks to its rules. It's just up to you to try to understand the rule. Yeah, up to you to try to understand the language of the forex market, as I like to call it. So yeah, so here we've broken a structure. The market is retracing, and how deep or where this retracement is gonna go is something that you can just use structure to try to guess, because you can look at this previous structure. Okay, the market could come back to this previous structure, and it could reverse, or we could come back to a particular Fibonacci retracement of this last move, maybe 618, maybe 50%, 886, and this is a situation where you can't guess exactly what the market is gonna do here. You can't. The only thing you can wait for is for the market to show you signs that okay, it's finished, it's retracement and it's about to resume the downtrend, and then you can jump on it. So this is why trading can be so hard at times, because you're going to come across lots of strategies that will tell you, okay, this is exactly what the market is doing. Every time market breaks the structure, it comes back, retraces the previous structure, and then drops. But then this market is not gonna there's the chances of the market doing that is probably 30%, because there's another strategy that tells you, oh, the market will trace back to a certain Fibonacci level, 50%, or 382, or 618 retracement, and then it drops. But then you have other strategies that will tell you that if you take a look at this whole corrective structure, this is my construction and expansion strategy. The strongest point of this whole structure is a line through the middle, and there's equally same chance of the market retracing back to that middle line before it drops. So the only thing that you can guarantee is the fact that every time a market breaks a structure, really, the market will retrace 80% of the time. That's probably the highest level of percentage you can apply to anything in terms of what the market is going to do after breaking the structure. Now, where is the market going to go? So we're going to follow this over the live stream. We're going to follow this, and we're going to see exactly. But I can guarantee you that at one of these levels, the market will retrace either this previous structure level, or either a certain Fibonacci level, or going back all the way to the middle line of the box before retracing. It's going to do one of those things. So let's move on to like I said, if you've got your questions, drop it in the comments there. For those of you that are just joining us, I've taken a short trade. Let me just recap and tell you what I've done today. So let me bring in my what happened to the last one. Let me bring in my so I've taken a short trade on the GBP USD today. I think I've taken a short trade around 135.91. I'm going to show you that on the account as well. Just give me a second. And the expectation is that this market, even though I've already said this at the beginning, this market, I'm expecting it to crawl up. I don't expect the market to give me any signs of reversal until we get to about 1 o'clock or even New York session. That's when I expect the market. But on a higher time frame, this market is in a reversal zone on a higher time frame. So looking at this again, back on the 4-hour chart, I've already explained this, so if you're joining me late, you probably haven't seen this, but I've explained already. The market is currently in a reversal zone where I would expect at some point this week we are gonna get an impulse leg to the downside, and that's gonna be a trade that I will be taking as well. So in the meantime, we are in a reversal zone, and so let's go over to short position. $90, that's where I took a short position. Don't look at this as a, this is just a guide to tell you exactly which direction I've taken my trade. It's not a, it doesn't tell you exactly where my stop. I don't use stop losses when I trade. I don't use stop losses when I trade. So, but anyway, looking back on the account that we've placed. So this is, I've placed a trade. So as you can see, currently, down about, you know, how many in terms of pips? 90, 97, about 7 pips. I've gone in with a lower bit of a, you know, lower risk this time, because this is the kind of trade, like I told you, is similar to the first trade that I placed on the first live stream that I did. With this kind of trade, I do expect the market to go a bit higher, and if I was, you know, to go a bit higher before it reverses. So in that case, I'm not gonna go in with the, you know, the same kind of risk that I took on the first day. So that's why when it would, I mean, I expect this trade to be a losing trade. If I'm being honest with you guys, I expect it to be a losing trade, because, you know, this is similar to what I just explained to you in terms of you can never tell exactly when the market is gonna reverse, or at what point the market is gonna, you know, you can never call that, you can never predict it. So this is one of those trades where I know the market is in a reversal zone, and at some point we're gonna get that move to the downside. But this is gonna, you know, it's more like, but it's based on the strategy again. The strategy tells me it's a short trade, and I've taken a short trade. But I expect this to be a losing trade. I mean, I could be surprised. The market could surprise me and give me a reversal at 130 or New York session. But we have to wait and see. You have to wait and see. And in terms of, like I said, this is the my FX book account, which I'm trading every single trade that I placed on my MT4 platform. You're gonna see the trade here, and the link to this is gonna be in the description. Actually, I should put it in the description now, but I'll do it in a bit. But it's gonna be, if you look at the previous live stream, you're gonna find the link in the description, so you can have a look and see the trades. So every single trade, like I said, I placed is gonna be reflected here, and you're gonna see all the statistics and everything that you might find helpful. So anyway, let's go back to the trade. So let's try to analyze the next currency. But if you have any suggestion, just drop it in the live chat, or if you want me to have any questions, anything you want, you know, questions, you know, charts you want me to analyze, and yeah, I will have a look at them. So, but we're gonna move down the order. So the next one on my list is the Aussie dollar. So let's look at the Aussie dollar. Ashim says the goat is back. Well, thank you for the compliment. I appreciate that. So looking at the Aussie dollar, I think I've looked at this on the previous chart as well when I told you that this. Listen, one thing, guys, you have to realize is the fact that when you're analyzing the market on a higher time frame, it's a lot easier to kind of predict what the market is gonna do on a higher time frame, because on the higher time frame you just have to follow the trend. You don't have to do anything but just follow the trend. You know. So we're in a higher time frame here. I've already looked at this in the previous live stream where I told you we're on a currently the Aussie dollar is in a downtrend. We can see that on a weekly chart. The market is trending down. And what the market is doing so far, it hasn't broken any structure level that will change that trend. Now, to this market, it's following the rules. If you ask this market, like if this chart is a perfect chart, the market is gonna tell you yes, because it's following the rules. And if you understand the rule, the bearish market rule, or the bearish structure rule, you can look at this and say, yeah, this is perfect. Even though it looks imperfect, it doesn't look symmetrical, but to the market, it's absolutely perfect. Now what I mean by that is, we have a bearish move down. You have the correction, pullback. Another move, create a new structure low, pullback. Another low, create a new structure low, a pullback, new structure low, a pullback. And you can see every single time the market pulls back, it does not break the previous outside return, the previous retracement. So to the market, this is a perfect move. And it's creating new structure low every single time. And the market will continue doing that unless it ends up breaking this pattern. So no way can you expect the Aussie dollar to go. You can expect the Aussie dollar to crawl back down and create a new structure low. The only thing that would change that is if the market decides to go up and break its rule and break this previous structure, then yeah, you're gonna say, okay, the market now is talking to you. It's telling you, listen, I'm about to change. I'm tired of being bearish. I'm about to go in another direction. But then again, you have to remember the fact that if a market breaks a structure, it should never be a signal to. It's a sign to try to listen, to try to understand what the next move is gonna be. And after breaking the structure, the market might gives you a little pullback before it takes off. But based on what the structure is currently, this market is favoring the bearish side. The market can or should continue going down and create a new structure low. So in terms of looking at this on a lower time frame, let's see if we have a potential trade on a lower time frame. No, we don't really have a I mean, I would say short trade is more favored because the market is in the. You see, this is another kind of one of the strategies that I trade people in terms of complex contraction. This is a complex contraction where the market gives you a move down and it gives you this choppy sideways corrective pattern. This is a complex contraction. A complex contraction, the market breaks to the downside. You can expect the market to retrace back into around the 6-minute retracement, and now we can expect this market to go down. This market has a potential. So if you look at this market on a higher time frame, a weekly time frame, we see the market is bearish. We look at this on an hourly time frame, we see the market is bearish. All the signs is pointing towards a bearish continuation on the Aussie dollar. 15-minute time frame. Do we have a potential advance pattern? Because that will probably confirm a lot of things. So we have we have a Gartley pattern. Do we even have a cipher pattern? No, it's just a Gartley pattern. So we have a Gartley pattern on the 15-minute time frame that has actually just completed. Gartley pattern that has just completed. A bearish Gartley pattern on a bearish market which has just completed at the 127 extension. So expect this market based on everything. This is how sometimes when you do an analysis and every one single one of your analysis points to the market doing exactly the same thing. So yeah, we can expect a reversal on the Aussie dollar. I'm gonna keep an eye on this one over the next couple of days in the live trade, and we're gonna talk about it. So I'll leave that. I'm not gonna get rid of that bearish pattern. I'm not gonna get rid of it. I'll leave that there, and we're gonna move on to the dollar card. So dollar card. Let's look at the market on a little bit of a higher time frame. Let's go over to the weekly. Let's get a better picture of what the market is doing on a weekly chart. So weekly chart, we can see that the market is bearish. because we have an impulse leg. This is a correction. This is an outside return. The market should go down and make one more low. This is a weekly chart. So weekly chart, we're seeing the market being bearish. Let's head over to our daily chart. Yeah. A daily chart is showing kind of a consolidation after an impulse move to the downside, to the upside, sorry. And the market has kind of come into a little bit of a consolidation here. But every single pattern, if you understand structure, every single pattern that this market is making in this contraction is a sell pattern. This is a sell pattern. This is a sell pattern. Patterns that usually end up breaking to the downside, and we've already seen that once. We've already seen that twice. Now what is the market doing? It's probably coming in to make another kind of a sell pattern that will end up breaking to the downside. It's easy to read the market on a higher time frame. It's easy to understand what the market is doing on a higher time frame because everything is a lot clearer. And then I say you have to, if you're a swing trader, then yeah, this is gonna be music to your ears. But you cannot be a day trader and use higher time frame. Or you can do that for you to kind of analyze which direction the market is going. But like I said, what this market is doing right now is just forming sell pattern after sell pattern. Because on a weekly chart, we had an impulsive move to the downside, and this is just the correction. So at some point, we can expect this market to start going down at some point. Do we have a trade on a shorter time frame? Not really. We don't really have a trade because the market is kind of coming into a consolidation really. And this is too deep of a retracement for us to have an advanced pattern. Yeah, it's too deep of a retracement to us to have an advanced pattern. Although you might have an advanced pattern going in the opposite direction. No, again, this retracement is too deep. 786 retracement. We don't have an advanced pattern, so I would stay away from the CAD. I've already done the New Zealand dollar. Yen is an interesting one. We've looked at yen. We know which direction the yen is. Yen is probably has broken that structure. Oh, this is a pattern that I told you 100% we're going up. Because this impulsive move followed by this corrective pattern, they will always break to the upside. And the first stop is going to be this level. Now once we get to that level, any guesses for what the market is going to once we get to that level? Why will the market do that? That's the question. Because we have an impulsive move here. This is the first wave of the correction. If you understand wave analysis, you probably understand this. You probably understand why the market is not just going to go up from here. It's not just going to go up from there. So dollar yen currently, you can look for longs up until this level, up onto 118. I expect the dollar yen to crawl up all the way to 118, and then once it gets there, we're gonna see what's gonna happen. If it breaks this structure, like I said, we can probably get a move down before the market takes off. But this is a clear long trade, a clear market is going up. I've got Bitcoin here. Let's check on our trades. We're slowly we're approaching 1 o'clock. Obviously 1 o'clock I will be adding onto my position. And yeah, so the market is not doing anything but still crawling up, which I expect the market to do that. Yeah, expect the market to do that. And yeah, this is gonna be a losing rate, losing day in the market. And yes, I would gladly take a losing day, and we come back tomorrow and fight. But let's see what the market is gonna do first of all. So moving on, um, let's do some cryptos. I've got Bitcoin here, so let's have a look at some cryptos. I know there's a lot of people that trade cryptocurrencies. Bitcoin, I think I've already touched on this once on last week lessons, last week live stream. So Bitcoin, we're getting a kind of again, if you understand corrective patterns, we have an impulse like here, a wave here, a wave here. I expect this market to probably go back down here before we finally take off. Now it doesn't mean that it doesn't mean that this correction, this is because if you look at this pattern that the market is making, this is a buy setup. That'll probably go one more high, but I don't expect this market to. I don't expect this market to break. I expect this market to come back down before it goes up. It can break because cryptocurrencies sometimes they can be very unpredictable. You can't really predict cryptocurrencies. They have a way of it's hard to predict cryptocurrencies, if you know what I mean. I mean, if you've been trading, you know how crazy they can be because they can go onto the bullish circle or the bearish circle, and then they just never look back. Um, yeah, but Bitcoin, I see some more sideways trading before we finally break the highs and go up. Ripple showing the same kind of a sign with Bitcoin. I expect these to come back down before it goes up because that will give you a classic 1 2 3 correction, a classic one. Yeah, so they're all bullish in terms of looking at those cryptocurrencies on a higher time frame. They're definitely bullish. Um, so it's just a matter of waiting for this corrective patterns. So when the market is in correction, it takes its time. For I told you this before that when the market is correcting, when the market in a corrective pattern, it takes 3 or 4 times, you know, as much days as as it would when it's in a trending market. Because the market, all these impulsive moves, they take less than a week. I mean, if you look at this one in particular, this one took 10 days. 10 days, and look at this corrective pattern. The corrective pattern is already on 171 days. So this is one of the reasons why people tell you there's a lot of patience. You have to be very patient if you want to be a trader. You have to be very, very patient because just because of things like this, because the market is patient in itself to go through its corrective patterns, and then you wait for the right time. So let's look at the gold. Gold is next on my list. Let's look at gold. Gold is in a corrective pattern as well. So in a bullish corrective pattern. Bullish corrective pattern. So this could come back down, break the low, and then it will take off. But that's looking at it on a daily chart. Looking at it on a weekly chart, yeah, it's bullish. Gold is bullish 100%. And we're probably getting a classic 1 2 3 correction before we take off. Now, mind you, I say classic 1 2 3 correction. It doesn't mean the market is gonna give you 1 2 3 correction all the time. No, sometimes it might give you a complex 1 2 3 4 5, or some kind of complex contraction. But you have to understand wave analysis to be able to understand this kind of corrective patterns. But yeah, but gold is bullish as well. So this is probably going to be a very good investment. If gold does come to break this previous structure, you can just buy and hold it. Because I don't see this market. I mean, you can look at the trend. See, that is a very good trend. So gold is bullish, and let's try and look at some indices for you. And guys, you're not even talking in the charts though. Does that mean that we have everyone that's in the chart here? They're all professional traders. They don't need any. They don't have any questions on trading. So indices. US. Let me start. Let me look at Nasdaq. They're all the same. But indices. I think I've spoken about this in a previous stream. I mean, this is just a long bullish trend that every single time the market dips, like what it's doing currently, presents you with an opportunity to go long. Because you can look at this market, look at the chart, and we're going to see constantly, you see all these dips. This is a kind of market where you just buy and hold. You buy and hold. Because even the kind of dip that we had during the pandemic, this is back last year in March during the pandemic, it still wasn't enough to kind of completely change the trend. So it's going to take something monumental in terms of fundamentals or technicals for this market to completely reverse this trend. And we know in trading, Forex is your friend. In fact, it's the only friend you've got. So the trend is your friend. So you just have to kind of, if you find a market that's trending in the right direction, just stay with the trend, whether bullish or bearish. But just at the same time, you have to just understand the language of the Forex market, because the market will communicate to you all the time. Because if you look at all these dips, there hasn't been a single time where the market has come below that any of those dips. Because if the market does that, that's going to be the first time that the market is communicating to you that, hey, I'm about to completely reverse the trend. There hasn't been a single time the market has done that. Even looking at it from way back here, all these dips. But at some point, it's gonna communicate. At some point, the market is gonna be tired of going up. You know, it's gonna do that at some point. So US oil. Let's look at US oil. US oil. Again, another one that's heading up. I think I've analyzed this on a weekly chart, where I identified a structural level that I said we have to just keep an eye and wait for the market to see the reaction on that structural level. So yeah, the market is right at that structural level, around 76.90. So it's about 100 pips from that level currently. But you have to wait. This is a kind of point, the situation where you have to wait and see what the market is gonna do. It might take a couple weeks, 3 weeks, maybe even a month before the market tells you exactly what the sign, what the communication is. Because the expectation is, as a normal trader, as someone who understands resistance and support, you would expect the market to respect this level and come back down. But that confirmation will come in the form of a huge red weekly candle close. But if the market decides to go up and break this level, again, wait, patience. Because when the market breaks the structure level, it doesn't just go up. It will take a breather. And you have to factor in this impulse, like this impulses will need a correction. So the breather the market would take, the retracement the market might do here might be even a lot deeper than a lot of people think. It might come a lot deeper, but it doesn't mean that the market has forgotten that it has broken a structure level and it goes up. The market can do that, because to the market this might be a reverse head and shoulders. This might be the market coming back to a particular a structure level before it goes up. So US oil is about waiting and seeing. Probably gonna take, like I said, 3 weeks or even a month to see exactly what the market is gonna do, and we're gonna be going through this on every single one of our trading sessions. And yeah,